Davey, yesterday money printing Papa Powell gave us a hopium rally, basically stating that, hey guys, we could still see a soft landing in the market, and that drove the markets up pretty substantially just within the last day. The S&P 500 still down 15%, but over the last couple days, look at this nice little bump here, a good 3 or 4% rally. The S&P TSX on the Canadian side of the border, guys, year to date only down 3% now, and in the last few days also drove up on that hopium rally, but all of that is kind of given up today because it's not based on fundamentals. I don't know how Papa Powell speaks and it just flies the market up, but I'm sure things are going to start to cool down. We'll see some profit taking. But more prevalently today, if you are like me, you probably don't care because you're focused on those dividend stocks, that juicy dividend income, which we're going to be taking a look at 3 dividend stocks that just increased their dividends. You likely hold these pretty substantial. Numero uno, we have to talk about Toronto Dominion Bank. My God, guys, this thing is up 1.75%, which seems a little underwhelming considering they posted revenue growth, guys, a surprise of 37.7% with an EPS surprise of 6.17%. And I just want to quickly analyze some of the loans that they're handing out because it gives some insight into the economy itself on the US and Canadian side of the border. But for most of you dividend lovers out there, you're probably paying attention to this announced dividend increase of 7 cents per common share, which is up 8%, which is just beautiful stuff. But let's start by taking a look at the loans here. And let me zoom in a little bit because on the Canadian personal and commercial banking loans, personal was up 2% quarter over quarter and 8% year over year. And commercial banking, guys, up 3% quarter over quarter and 15% year over year. Seeing some similar growth on the US side of the border with personal up 4% quarter over quarter and 10% year over year, and pretty much flat on the commercial side. But it's neat to see that the wealth management, because we all know financial management assets are getting devastated. We saw that with Power Corporation, guys, because it's down 4% quarter over quarter and 1% year over year. Deposits, very interestingly enough, on the personal side is actually up 8% year over year. So there's still people making some healthy deposits in Toronto Dominion Bank. And on the US side, personal, which also interesting, down 1% quarter over quarter, but up 5% year over year. But taking a look at the dividend increase side of this, guys, pretty astounding to see that they did increase the dividend basically at the beginning of the year. And it looks like they're increasing it again, which is 2 increases for this year, which is very nice to see, to say the least. An 8% on top of a 12.6% generally gives us a damn 20% increase just over the last year, which is astounding. But this is kind of weird because Canadian Imperial Bank also posted earnings increasing the dividend, but this one got slaughtered. It's down 5% today alone, and year to date, probably one of the worst performers, down 21%. Again, to put that in comparison to Toronto Dominion Bank over the year to date, guys, is only down 8.3%. But diving down into this, look at the earnings on this one because it missed revenues by 3.5 and it got wrecked on the earnings per share, which is down 20%, almost a surprise of negative 20%. But take a look because I just want to do a side-by-side comparison. And again, CIBC did increase the dividend as well, which is pretty incredible. But this shows the exact opposite results almost of Toronto Dominion Bank. Because when we look at Canadian and personal banking, again, primarily exposed to the Canadian economy, the reported net income here, guys, was down 10% from the personal and business banking, which I find interesting. From the wealth management side, which considering how bad Power Corporation got hit, Toronto Dominion Bank saw no growth, yet somehow they showed wealth management and again, commercial banking up 14%, which is pretty astounding year over year to say the least. And on the US commercial banking and wealth management, incomparable, guys, was down 18%. So clearly, I don't know what's going on in Canada, but people seem more inclined to get some wealth management services over the US. But kind of scrolling down here again, what everybody wants to see is the fact CIBC announced an increase in its quarterly common share dividend from 0.83 cents per share to 0.85 cents per share. Not nearly as a substantial increase as Toronto Dominion Bank, but again, this is the third increase basically within a year. I mean, they did 10% coming into the end of 2021. They did a 3.11% increase, 6 months in, so the middle of the year, and now they're going to be doing another increase that's still falling in line with that 15 to 20% increase. So it is kind of following suit with the rest of the Canadian banks. And I think they're increasing them so aggressively because they didn't increase them through the pandemic. I mean, we saw this long laddered period where the dividend was basically flat. So it looks like they're just trying to catch back up to their dividend growth rates, but kind of getting away from the financial sector, which overall, I think the banks posted some pretty good numbers. Again, they're not detrimental to any major extent. A lot of CIBC's losses came from like loan loss provisions with a slowdown in the general banking. So I mean, these numbers are going to be survivable. Even though the stocks are down, I debate that they're buying opportunities here. Again, banks are banks are banks. Just buy them all. They all work together. Some will do good, some won't do so good, but your moderate dividends will always continue to go up over the long period of time. And I think the stock performance will start to catch up. But take a look at Enbridge here, guys. This stock has just been on fire. My God, this thing is paying, even at the current rally this year of up 12%, paying a 6.4% dividend yield. You slap that on, guys, and you're looking at a damn near an 18% return over 2022. But this thing just announced, it already posted earnings, but they recently announced yesterday that they are going to be raising the dividend. They announced in 2023 the financial guidance and annual common share dividend will increase from $3.44 to $3.55 per share, or a 3.2% effective increase, right? And that's going to be going in March 1st, 2023. So we will not see that dividend until basically the end of the first quarter of next year. But my God, guys, comparable to the past, they're not really increasing the dividend like they have been, considering, you know, basically through 2022, we only saw one increase of 3%. But again, we're talking about a stock that is already paying a massive dividend yield. So to be getting increases plus stock gains through this year is just absolutely astounding, considering this is, you know, North America's largest pipeline producer, with pipelines, oil and gas pipelines going all the way from Alberta down to Texas. I mean, if you use natural gas in Toronto, you're likely using it from Enbridge's utility services. And this thing pretty much saw growth across almost all of its segments: liquid gas pipelines, gas transmission, gas distribution, renewable power. It's a very well diversified utility and gas and oil company, basically. And I'd rather buy this than say something like Exxon. But again, I get this exposure through my ETFs. This is Canada's third largest company, basically, I think next to Royal Bank and Toronto Dominion Bank. I love these, and I know a lot of investors out there hold these dividend stocks. So I'll pass the question off to you. What do you guys think about the earnings, the increases? Do you hold Canadian Imperial Bank? What do you think about it dropping? How do you feel? Are you buying the dip? I'd love to hear about all of that. But stay cool, stay awesome, and as always, I'll catch you in the next one.